All right, welcome everyone. Welcome to another market wrap. मेरे साथ हैं Mr. Pankaj Pandey, and this has been another dangerous week. Markets have been bleeding like anything, sir. In this moment, as we close, we are very close to a calendar year as well. What do you see coming up next?
Yeah, hi, good evening, Vishu. So, yes, this has been a week where we've seen markets or Nifty correcting by 4.5%. So, it's a very sharp cut, what we have seen. But this is in line with what the most global markets have also experienced. And I think this is more to do with the Trump effect because what we have clearly seen is that Fed policy was there. So, Fed is clearly turned a bit of a hawkish in terms of rate cuts. So I think that is sort of leading to overall weakness in the markets. It's more to do with the global factors. On top of it, I think the dollar index also has been sort of rising, which again is sort of leading to risk of sentiments in the emerging markets. So I think this 4.5% kind of a cut. So what we have done is that we have reached the support levels this week. And I think unless market recoups those levels of say 24,000 plus, I think we would be witnessing a probably an extended correction, contrary to what we were expecting earlier. So this has been a sort of a week where we are seeing sharp volatility, and I think going into 2025, our technical team has come out with a Nifty target of 28,800, and which again is a combination of technical parameters as well as the statistical parameters. Largely in technical parameters, so Nifty has been sort of been in a certain channel. So upper end of that channel is about 28,800 kind of a level. The other perspective is that at 52-week EMA, whenever the market touches, you see a downside of 5-6 odd percent. But the upside over the next 12 months is somewhere about 23 odd percent. And I think what is also coming out clearly is that the broader markets look a lot more attractive. So there is a breakout which is happening Nifty 500 versus Nifty 800. And this is happening after 18 years. So broader markets look good. And I think from a statistical perspective, one thing is very sort of interesting is that whenever the FI sell-off exceeds 30,000 odd crores, which we did in a single quarter, I think the next 12 months returns have been pretty good in the range of about 28 odd percent. So from that perspective, while yes, we are going to probably end this year on a sort of a softer note because we have lost nearly half of the gains. Prior to October, we were sitting on 24-25% kind of a gain. So we've lost half of it. But our sense is that better days are ahead, especially in 2025.
Great to hear that, sir. You mentioned US Fed rate just now. That is also something that's on everybody's mind. I think we saw some 25 BPS rate cut. So, what are our key takeaways from that? Could you help us a little bit there?
I think what was clearly expected from Fed was to that it is going to cut rates by 25 bps, which it did. So now the Fed fund rate is 4.25 to 4.5%. But that was the only good part because see, you look at market was expecting 250 bips kind of a rate cut. So about 100 bips this year, which is what has happened. 100 bips in CY25, which is what Fed is now saying is that you'll have only probably two rate cuts. So from 100 bips, it will come down to 50 bips. And CY26, it will be a cut of about 50 odd bips. I think that is what has really spooked the market, and we have seen US markets also sort of witnessing a pretty sharp correction there. And I think that is what is sort of percolating here also. The bond yields there have gone up by about 20 odd bips. So from 4.38, they have gone up to about 4.58. And clearly, I think this is more to do with the fact that with the Trump expected to sort of come in, Fed is really not sure in terms of how the inflation trajectory would be or how the fiscal side would be, and which is where they are guiding for lesser rate cuts in CY25, and that is really impacting the markets, not only them but even us also. So I think at this point in time, we would want to sort of keep our fingers crossed, especially with global cues turning or being negative.
Absolutely. Another event was the Accenture Q1 25 results. So, what happened there, and any cues for us for our IT?
So Accenture overall, when you look at their numbers were quite good. It was a broad-based revenue growth, what we're seeing. Then overall signaling or number-wise, it is quite encouraging for the sector. So revenue growth for them was 9 odd percent. Margins were stable. New bookings have gone up or have been better. I think good part is that consulting, which is their 50% of the revenue, has sort of bottomed out. So that is the good part. Then I think another interesting thing what they highlighted is that the Gen AI business is now contributing 6% of their overall book and has seen a pretty good growth of say from 1 billion to 1.2 billion dollars, and which is positive for IT overall, because somewhere down the line it signifies to our Indian IT companies that this is one pocket where customers are willing to sort of spend money. So that is a positive takeaway. I think overall the client level budget spending will be clearer in the next quarter. So which is where I think everyone is waiting for, and which is why I think probably while the overall commentary everything was encouraging, but since the overall sentiments were down, so we didn't see IT stocks doing much, especially on Friday. But yes, number-wise, nothing to complain from the Accenture numbers and overall commentary for the IT. So that remains intact.
Great. We also saw the new, or let's say revised national electricity plan. So, what impacts can we see on the market from there?
So before I come to that, see, Siemens is what I will sort of talk about. Now, Siemens had their con call so because Siemens is one of the largest capital goods companies, so obviously what they guide or what they talk has implications. So what they clearly sort of highlighted is that they expect the government capex to pick up from January 2025 onwards. On the private sector side, the capex is yet not picking up. Private sector is actually doing capex in only some segments like, say, semiconductors, batteries, solar PV, or they are doing in some segments like, say, utilities or distribution side. So from that perspective, these are their broader comments. Another thing specific to Siemens is that they'll be splitting. So Siemens Energy is going to be listed, so which is about one third of their revenues, and it is going to get listed in CY25. Otherwise, I think since they are still saying that the ordering and tendering is a bit slow, and which is why we've seen a very sharper reaction in the stock. And this is what typically happens when the stocks are priced for perfection. Any kind of a sort of a letdown, even in a minor way, impacts the stock significantly. Now, Siemens also highlighted that there is a good amount of capex happening on the power distribution side, and which is what I'm sort of coming up to. On the power and distribution side, clearly, when you look at the government is looking at a capex of nearly about, say, 4.3 lakh crores up till March 2027, and closer to 5 lakh crores from 27 to, say, 30. And what they're looking to do is that they are looking to literally double the substation capacity. Then the transmission network is expected to be enhanced from, say, 4.9 lakh circuit kilometers to about 6.5 lakh circuit kilometers. So which means that this is one segment. So while generation has largely been talked about in terms of we doubling our capacity in terms of renewable energy, especially the solar side, I think distribution is something which is also sort of gaining pace, as also highlighted by Siemens. And what it does is that it benefits some of the companies like, say, Power Grid. So Power Grid is obviously one of the biggest companies to look at on the transmission and distribution side. They transmit 45% of India's power. They've got projects worth about 50,000 odd crores. Their order book is closer to 1.5 lakh crores. So that is one company which will benefit. KEC International is another company which should benefit. They've got an order book of 23,000 odd crores. They raised another 1,000 crores for growing their T&D business and for working capital management. So that is another segment, or then another stock which should benefit. And Kalpataru Power also has raised about 1,000 odd crores. This is also a company which is in the power T&D space and expected to deliver, say, 25% kind of a revenue growth. So I think these are the three beneficiaries, but overall sense is that power distribution as a space, which looked like a neglected space, is getting some attention, and companies are also sort of raising money to sort of chase that growth.
Right. We also saw recently that the limit for collateral-free loans has been increased for agricultural sector. So how do we see that playing out?
So one is, see, this is not something new which has sort of come up. Earlier, borrowers were offered a collateral-free loan up to 7 lakh. But now what will happen is that from Jan onward, this limit has been expanded to or increased to about 20 lakh. Now, what this does is that, see, banks will typically not do much of a housing loan without collateral. And whereas the government wants to sort of provide benefit to small and marginal farmers, so because they form nearly 86% of the overall farming community. And I think with a protection mechanism like this, it is definitely going to encourage banks to sort of lend. Because what it does is that it increases their business, and also there is a guarantee which comes along with this growth. So obviously it is positive, but we need to see how this sort of pans out. But typically it is more positive for PSU banks and NBFCs on the rural side.
Right, right. Moving on to another sector, which is the domestic battery industry. I think we saw a lot of agreements being signed and in between companies. I think Hyundai was pretty active, and then LG was active. So what all are the readings there?
So one is, if you look at Siemens, also highlighted that there's a capex happening on the battery side also. And we have seen a couple of news announcements this week. In fact, three news announcements. One was related to Amar Raja. So Amar Raja has come up with a new battery, which is what they are going to supply to Hyundai. So these are sort of better batteries in terms of durability. And I think from Q4 FY25 onwards, they'll start sort of supplying these batteries to Hyundai, which again is a sort of a big player. So which is why we like this stock. The other is that Hyundai already has a tie-up with Exide Industries on the EV batteries or lithium-ion batteries. And which is why they are doing a capex of nearly 6,000 odd crores. Initial capex is about 4,000 odd crores. They've already spent about 3,000 odd crores now. And they're going to supply battery cells for EVs. And this year, we are expecting Hyundai to launch multiple electric vehicles. So obviously, the excitement is there. And that is another stock which we have been liking for quite some time. Now, while the opportunity size is large, which is why we are seeing newer players also sort of entering. And we saw a potential JV happening between JSW Energy and LG. So LG is one of the biggest suppliers of batteries. Now this JV could be $1.5 billion, so which is about 12,700 crores. And largely they are going to bring the technology, and JSW is going to contribute in a financial way. And I think so. Overall, when you look at things are falling in place in terms of we are seeing a ramp up in the overall distribution network for or charging network for EVs. And then I think in the associated ancillary support segment, we are seeing action on the ground, especially related to batteries, because see, battery is one of the biggest or largest cost component for an EV. It contributes nearly 40 odd percent. So all these things are pretty good from the perspective that we are going to see far more higher penetration of EVs in the domestic market, and we are already seeing launches happening in two-wheelers plus four-wheelers.
Absolutely. Right. Finally, coming to the our most important, most awaited section of the day, hidden gem of the week. Which will it be this time?
So pumps are very integral to a lot of segments, especially say, for example, refineries, petrochemical, pharmaceuticals, power, nuclear in particular. I think this company caters quite well to the nuclear segment. So KSB is what I'm recommending with the target price of 965. Now they have got an order book of about 2,400 odd crores, and 50% is coming from the nuclear segment. Last 9 months, their growth has only been about, say, 10 odd percent. The management is clearly saying that they are looking at a growth of, say, 15 odd percent. calendar year 2024, which means that in this quarter we should be seeing about 25% kind of a growth rate. And given that their order book is quite good, this is a MNC, so from that perspective, a 16% kind of a revenue growth and a 20% or 21% kind of a profit growth looks quite attractive. This is one of the smaller cap companies, but why we like is that this is catering to crucial segment in the entire energy chain. And with a P multiple of or valuing the stock at 36 times, we feel that it's a portfolio stock in the mid cap and small cap space.
Right, absolutely. Well, that was it this time. We'll be back next week with another app. If you have any questions for our research team from Pankaj sir, please put them down in the comments. See you next week. Thank you so much once again, Pankaj sir, for your time.
Thank you so much.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.